Hi and welcome to the Market Alert for Wednesday, the 9th of March 2022. Just before we get into what's going on, which obviously is an awful lot, be aware that the volatility is picking up a pace and there are some quite interesting swings going on. So, be careful of the volatility just in case you get caught out. Just a bit like the nickel traders that were short on the ETFs yesterday. 7 million wiped out in an instant because they were short nickel. Why you would be is beyond me, but there you go. That's the world we live in, where people would actually consider being short any commodity in this time. Is bizarre, but there you go. So be warned, the volatility is picking up, and if it's too much, then open up a demo account and still trade that way. Don't be put off, but just be aware that the volatility has picked up a pace, and I expect it to continue like this for a while as you try to get to grips with everything. So anyway, let's get on, see what's happening. Like I said earlier, there's a lot happening at the moment. We've seen that the US now has banned Russian oil. I don't think they imported too much, but even so, if it's symbolic or a token gesture, it's not a good one, and I'll show you why. So again, this is the mainstream narrative, isn't it? Freedom will cost, I'm not going into that. I don't want to get political. Not all oil is equal. Why banning Russian crude is risky? Well, absolutely it's risky, because what it's going to do, I'll show you in a second what it's going to do, or what the Russians are going to do. Gas prices are going up. Can't do much right now. Isn't that convenient? Russia is responsible. Like I say, this is either the black swan event or it's engineered. You've got a situation now where Putin can be blamed for the whole collapse of the financial system, and they get the hyperinflation that the IMF has spoken about in the document I mentioned yesterday. Now, the Saudis refused to take Biden's calls to discuss Ukraine situation, talk to Putin instead. Maybe it was a mistake to call Saudi Arabia a pariah state. Yeah, amazing how it comes back to haunt you, isn't it? US sanctions can't keep China from buying Russian oil. This is what I was talking about. And Chinese firms mull buying stakes in Russian energy giants. So yeah, you can see that this is going to create a West and East divide, can't you? It's going to be interesting. But onto the markets, just before we get in, this morning there is some news. This was out on Sky, that there is going to be, if I can find it, there it is, a ceasefire will begin in the Ukraine at 7 a.m. So this will affect the futures of the German DAX in particular. Not very strong, stronger than the Dow, which we'll look at now. So the Dow yesterday, let's go to the 30 minutes so we get an idea of why we've ended up on the downside on the Dow. So yesterday we took off to the upside. We had a retracement, and then when Biden came out and banned the importing of Russian oil, the market traded up to the 200 MA, and then it found its way all the way back down, because the implications obviously then set home. As I said to a friend yesterday, this is just insane for me to ban the importation of Russian oil, because now we'll probably turn off the gas pipe. We're already 1,200%, isn't it, of yesterday? Just have a quick look. 1,200% on natural gas for the UK yesterday. We got 1,000%. It was actually 1,200 yesterday, so it's come down a little bit there. But massive increase. So it's going to be tit for tat, isn't it, with these sanctions now? It's plain to see. So anyway, when the reality came in and there was going to be massive inflation, higher petrol gas prices in the US, then the market said, you know what, this might not be that particularly good of a move. It might be morally good and symbolic, but economically, you've just shot us in the foot, Biden, and we're going to see massive cost increases everywhere. And like I say, we could even turn the gas off into Europe. So the Dow ended up down, trading down to 89% retracement there. And overnight, on the prospect of this ceasefire at the moment at 7 a.m., the market is slightly higher. Let's have a look at the DAX, and you can see if we go to let's go to the 30-minute chart for yesterday first. Again, we had a massive move to the upside. Then we tread water for a while. We came back down to the DP. Biden comes out, says he's banning Russian oil. Market goes through the previous high, plays with the 200 MA, and the market comes back. And overnight, prices have moved back to the 200 MA and are sideways to higher at the moment. It's 10 minutes to 7. And unfortunately, because there's so much going on, I can't get the alert out before then. But you'll see the market's reaction to this 7 a.m. Ceasefire. So in the daily chart of the DAX, you can see that we're moving up. Yesterday we traded higher than the previous day's high, and as I said in yesterday's market alert, we were due for a move to the upside to break the pattern that we'd seen with all of the lower highs, 6 consecutive ones. It was a bit of short covering there yesterday as well, but the market coming off before the close at 11 a.m. last night on the electronic, but just trying to move up there at the moment. Okay, let's put a few fibs on the chart. So on the downside, we've got a low for yesterday, not yesterday, the day before, Monday. So this is the downside targets for the Dow, and if we do get a move off this ceasefire to the upside, this is the upside, and you can see the market yesterday trading to the 38% and 5 MA. The moment struggling to close above the 5-bar moving average there. So let's see what happens at 7 a.m. Yesterday in the 5-minute charts, I've marked up all of the fibs on the chart so that you can see how powerful this is in combination with all of the other tools. Yesterday morning, as I said in the market alert, the market hadn't closed or traded back above the previous day's high, and yesterday it did this. You can see all of the pullbacks in this market, the 89s as the market's pulling back, and then we get a big move to the upside, and then inside of here we also get a retracement, and then down to 38% of this big move. We then move back to the upside where we stop at 78%. We then move back down where we stop at 89%. We then move back up to 78% at the R1, and then the market moves down to here, which again is going to be measured off here, which I haven't put on, which is going to be a 50% retracement there. And then inside of here, as the market comes back, we get an 89. I could draw all of the individual ones in here as well, but there's no need to do that. I'm just showing you the main swings here, and how combined with all of the other steps in the strategy, you can use these to your own advantage. Again, we go from this point to here. This takes you to 89, and inside of here as well, there is 89. Down we go, we're overbought, and then we stop at the double bottom here before moving up. And then again, I haven't drawn it in, but inside of here you will have 89. Oh, I've got it says there. I've got it in there, and 89%. And then down she comes before the cash close. And then after this, you've got this massive move on Biden, with Biden stopping the importation of crude from Russia. Again, you can see all of the activity there at the DP. Market up, retracement. Again, that's a 62% retracement. We're oversold, and then wallop straight to the upside, and then the market makes its way down overnight. And then at the moment you can see that we're starting to wind up on this news, but the key is going to be in the daily chart, how far we can move the market to the upside here, and also to make shorter term, look at the 30-minute chart as well, using the retracements that we've got in here as well, combined with everything else. Right, quick look at the metals. The currencies barely moved yesterday, which is unusual given what's going on. So they were more or less sideways. So just to keep this one short today, so have a quick look at the metals so I can get this uploaded and get it to you. Silver, massive day up yesterday. They hammered the price. If you have a look on the 30-minute chart, absolutely hammered it back $1 yesterday. You can see that red line to this red line is $1. They took the opportunity And then, of course, the reality of what Biden's done is inflationary, so they've brought the market back and it's now going up again. In the monthly chart of silver, you can see that 28 is the next upside target, apart from a couple of fibs in between. We can see we're at 78 at 27.13 yesterday. They need to take this price out. There we go. And then you've got the psychological level of 28.75. And then we need to get through that $30 level in order to have the explosive move to the upside. And hopefully one like we've had in nickel, where we saw, I think it was 250% rise in one day. That would be fine by me, because this is seriously undervalued, as I've barked on about for months, years in the market alert. It's just a matter of whether they'll let it go up or not, isn't it? In the gold market, they've certainly allowed gold to go up, because we're at $2,070. But if we look at the monthly chart, we've not quite made it yet. It's $2,076. And then we'll be heading to 2,500 once we can get through this. Obviously, take the 100 out first and then march upwards and onwards. This has got a lot of upside potential, as has the price of silver, because of the inflation that is definitely guaranteed now, or hyperinflation that is guaranteed. Crude also moving back up yesterday. This is going to continue to move higher. This is going beyond $150 a barrel because of Biden, Britain, everybody else's decision to no longer. I mean, they're just going to stockpile oil, aren't they, in Russia and China. I mean, what happened to the Green New Deal and zero carbon? I mean, it's amazing, isn't it? You know, all of a sudden, the environment disappears, and it's like, where are we getting our oil from? I mean, I know that Biden, before he made the announcement, had done a deal to actually reverse Trump's sanctions against Venezuela, and also to actually take more oil from the Middle East if they'll allow him to take it. But like I say, the only thing that's guaranteed looking at this chart is higher crude prices, higher fuel prices, higher inflation and hyperinflation, just as ordered by the IMF to get out of the government debt. The only way they can get out of it is to crush the middle classes and the poor people in order to keep the banking system alive and kicking. That's it, I think, that cheery end, but that's the reality, I'm afraid, of what they're doing at the moment. The dollar, of course, a quick look there, that's going to be making a rapid descent before long, again, as the reality kicks in of what the decisions by Biden have been made. So keep an eye on the dollar, because that's once it gets into free fall, then we get the serious moves in the metal, and also inflation as well. Week today, we have the Fed announcing an interest rate increase. Whether they go ahead with that, who knows? Economic news today, not that it really matters a lot at the moment, but we've got the JOLTS job opening, crude inventories. There's a shortage there, minus 1.1 forecast, minus 2.6 last week. 10-year bond, and then tomorrow, of course, this is going to be the biggie. We've got CPI, which it's obviously going to be lagging at the moment, but next month will be very interesting indeed when it's released. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.